Hello, everybody. I am Matias Wibowo, the sector lead and investment manager for energy and environment at ClearlySo. Each year, ClearlySo review no fewer than 1,000 investment propositions. We speak with hundreds of entrepreneurs and cultivate relationships with 750 plus individual investors and 2,100 plus institutional investors. Based on the market signals that I've been monitoring, including public statements from policymakers, expert analysis, and conversations with investors and entrepreneurs, I am inclined to suggest that the COVID crisis has intensified the pressure to accelerate the transition to clean energy. We will discuss this in our upcoming webinar on Thursday with clean tech entrepreneurs and investors, but here are some initial thoughts. Let's start with two broad trends from the COVID-19 lockdown economy. First, our present economic model causes problems that most governments, financial institutions, and corporations are not fully able to cope with. COVID has only underlined this reality. Second, we have seen that it is possible to create transformational shifts overnight. It took less than 2 months to bring our whole country to a completely different economic footing. Most would argue that all this is for the short term only, but there is a strong business and public policy case for using this crisis to implement permanent change. There was already momentum toward clean energy transformation before this crisis began. For example, in early March, Chancellor Rishi Sunak announced a UK budget whose elements favored clean tech. The question is, has the crisis weakened this momentum or strengthened it? On the demand side, demand for coal, oil, and gas has drastically shrunk due to the global suspension of economic activities. The drop in oil demand is equivalent to erasing the last 8 years of economic growth. The Wall Street consensus is that energy demand will return to 2019 levels by 2022 in the best case scenario, but most likely not for many more years. On the supply side, disruptions in the fossil fuel industry supply chain will also take years to resolve. Under pressure from OPEC and its allies, companies have shut down their oil wells. But oil prices are still at historic lows. Many companies will inevitably fail. Meanwhile, renewable energy technologies are now globally available and already cheaper than fossil fuels. For example, our nation's coal generators have not been running for almost a month, our longest run without coal since 1882. There is a growing view that we should drop fossil fuel subsidies if we wish to optimize our energy mix. So, the economics is clear. The wild card is how consumers and governments will behave as the pandemic recedes. At this stage, COVID-19 has introduced citizens to new experiences and norms. Citizens in once polluted cities are experiencing clean air. Physical distancing has introduced new ways to work and commute, such as working remotely and cycling or walking to work. European cities are opening up more street space for bikes and pedestrians. Transport Secretary Grant Shapps announced a similar policy this past weekend for the entire UK. More and more citizens across the planet are supporting tougher emissions control as efforts to tackle the climate crisis have multiplied. The longer the COVID recovery, the more permanent these behavioral changes are likely to be. In summary, the COVID-19 crisis has shifted the drivers of our energy map. Economic, political pressures will provide the momentum that governments need to take more aggressive action to promote renewable energy and to pivot away from fossil fuels. If you wish to hear further insights on this topic, from entrepreneurs and investors in the clean tech sector, join us this Thursday for our webinar. Check out our website or link below for our info about how to register or to watch the recording. Stay alert, stay safe, and have a great day.